Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday, the 11th of October. My name is Russell Shaw. I'm a senior market specialist at FXCM. My email address rshaw@fxcm.com. And of course, if you'd like to contact me, that's the email address to use. Just going to go ahead and bring up our disclaimers. Here's the high risk investment warning. I'll keep this on screen for a few moments. Good morning, Kim. Thank you very much for signing in, much appreciated. Thank you to everyone for joining this morning. Just keep this high risk investment warning on for a few moments longer. Okay, here is our market commentaries disclaimer. Good morning, Raj. Pleasure to have you on the webinar. And just finally, our references MarketScope 2.0 and TradingView.com. My pleasure, James. My pleasure. All right, let's just go through to TradingView, starting off with our real rate, which is generally the way we start off our webinars of late. And the idea here is that there is a decline in the real yield, and as a decline in the real yield, the overbought condition that we've been looking at on the daily chart is has normalized as well, but that pullback in the real yield is really acting as a support for the risk markets. That's a theme that we've actually been looking at over a few sessions now. One thing to say about this is, whilst the daily chart has pulled back, the weekly chart hasn't. Okay, so there still might be some room for moderation. The real rate can still come up, it could still bounce because the daily chart has normalized, but I think there is a limit. I think there's a ceiling here in terms of the yields, and that's because of the longer term overbought conditions. So in terms of much higher yields, I'm not certain we're going to get that. And remember, those higher yields have been acting on the risk markets. They've been supporting the US dollar, and they've been pulling down the other majors. So that sets up an interesting dynamic for us, because we might be at some sort of transition stage. Now, these transition stages are very difficult to track until after the fact. So it's very much speculative at the moment. So the idea here is, well, are we actually seeing sort of a bottom setting, so to speak? I can't say for sure. We're obviously going to monitor this on a daily basis. But one way sort of my analysis has evolved is if we take a look at NASDAQ. So if we bring up the NASDAQ, we'll come back to dollar in a moment. I just want to show you what's happening with NASDAQ. So I'll just bring up NASDAQ. And as the rates move higher, that's going to act as a headwind against the NASDAQ. The NASDAQ tends to be one of the most sensitive indices when it comes to interest rates. Now, the way that we looked at this just maybe a week ago, maybe 2 weeks ago, was that there is a downtrend here. So we can put in a peak. A peak. We could put in a trough here. We could put in a lower peak here. and we can put in a lower trough here. And that's a downtrend, right? Because this is the lower trough that follows the lower peak. That being the case, in peak and trough analysis, the next question is this a lower peak? Is this a lower peak? This is still a scenario. So let's call this scenario 1, right? So this is scenario 1. There's a downtrend with a lower peak. However, if we are seeing some sort of ceiling in terms of the yields, if we are, then the yields would most likely stop acting as a headwind against the NASDAQ. If they stop acting as a headwind, then what's another interpretation? And another interpretation is, well, we've got this downwards line over here. We can probably look at this in terms of a descending triangle. I don't think it makes a big difference. I think it aids us. When I say I don't think it makes a big difference, it doesn't take away anything from scenario 1. This would be scenario 2. But if we get a breakdown, in that direction, well, that's scenario 1, and the symmetrical triangle helps us in telling us, well, it's a breakdown from a consolidation pattern. But if there is now a ceiling in terms of yields, and if we see yields pull back, okay, because I'm not sure that's the case, I think there's a ceiling. Most likely we see some sort of consolidation at these levels. But if the NASDAQ reacts in a positive way, well, then the breakout is going to help us. Okay, then we can say, well, it's broken out of a. So that scenario 1 would be the downtrend with a lower peak, lower trough. Scenario 2, well, let's call it a consolidation, and let's see which way the breakout occurs. Does it break out to the upside, or does it break out to the downside? And you can see that the RSI here has actually popped. It's gone above 50, and the truth of the matter is we do have a reference candle that has locked itself in here, a positive one. This would be the reference candle, and then last week's price action actually puts in the trough. Okay, so we are seeing sort of a bullish reference candle in motion at currently. So the idea here is, I think, to keep an eye on the yields. The overbought condition on the weekly, does that normalize? If it does normalize, how does the risk market react? And the way that we're going to look at the risk market reacting is whether there's a breakout or a breakdown from a consolidation pattern. What's that consolidation pattern? It's a descending triangle. Okay, a descending triangle. I think I said asymmetrical before. I beg your pardon. It's called a descending triangle. Okay, so and then if you take a look at NASDAQ on the daily chart, it's actually making its way into zone 1. The question now is, does it hold? Does it hold in zone 1? And that's going to be interesting. So over the last 3 sessions, it's pushed its way in, and pushed its way in from zone 3 into zone 1. Again, just reaffirming that positive reference candle that we showed on a weekly, this one over here. All right, but if there is going to be some sort of support for the risk market, one would expect dollar to be giving up some of its gains. So let's just take a look at dollar and see if that is in fact what's happening. So let's go through to the FXCM US dollar basket and just take a look at the price action there. All right, I beg your pardon, just waiting for it to come up. Here it is. Okay, here's the US dollar. Okay, so if the yield's pushing down, if the Nasdaq's been supported, we want to see if there's pressure on the US dollar. And I think last week's candle starts off the story, and you can see it's a what we call is a gravestone doji. That's a bearish candle. In other words, bulls push price all the way up to the high for the week. That's where they subsequently lose control and the bears take over, and the bears push price right back down, and then the bears are in control at the end of the week, because we're looking at a weekly chart here. Well, take a look at the price action since then. The bears have carried on pushing the dollar down, and we just want to see if that in fact does push down even further. Okay, we want to see if it closes below the low of that reference candle, and if it closes below the low of that reference candle, then we've got a reference candle effectively locked in, don't we? And if we look at this on the daily chart, you can see it's making its way slowly and steadily towards the to zone 3. And just something that's probably going to be influential here. I think yesterday I said the CPI is coming out today. I beg your pardon, that was a mistake. The CPI is coming out on Thursday. Okay, CPI comes out on Thursday, but we are getting PPI, the production price index, out today, and then we'll also get the FOMC minutes later this evening at 8 p.m. ZA time, 7 p.m. UK time. And the minutes may be influential just to see, again, just how hawkish the Federal Reserve is. But over the last few days, we have had some Fed officials speaking, suggesting that because rates, the yields are so high, that may be doing the work for, that may be doing some of the work for the Fed. And that was also a catalyst for pushing the yields down. All right. Just want to see if there's any questions that have come through. Let me just, we're all good. All right. So let's just reiterate. We're talking about potential ceiling on yields coming down, risk markets being pushed up. Yesterday we suggested a potential risk on day, dollar coming down. If dollar's coming down, okay, what we can do is we can just monitor the resistance areas. So central pivot, R1 level. So this R1 level looks quite strong. Also, just keep an eye on the indicators. If the moving average is crossed down, and if the stochastic crosses down, that's the trigger. Then it's all about the momentum. Do we get that momentum push behind us? Let's just take a look and see what's happening on euro. Okay, remember, if the dollar's coming down, then it's quite likely that we should expect some sort of support in euro. And let's just go through to the daily chart. You can see that it's moved from zone 3 into zone 2. That's relative strength forward. And look here, we're getting a positive cross in the exponential moving averages. That's trigger 1. And now we've just got to see if there's going to be a trigger 2. So the 2 triggers, and then if we get the triggers pulled, do we make our way into the upper quintile? Just a brief explanation of why do we use 2 triggers? Because they actually are representing 2 different aspects of technical analysis. The exponential moving averages are trend following. Okay, so there's something called trend following indicator. So we want to see if we're picking up a trend or a swing. The stochastic is a momentum indicator. So we want a momentum behind the trend. So that's why we're using the two triggers there. And then of course, when they get pulled, we get sort of a double confirmation. It doesn't guarantee that the swing pulls out. What we need is for the EMAs to show angle and separation, and for the stochastic to make its way above 80. Let's just take a look and see what's happening on cable this morning. All right, not quite a positive start to cable, but on the daily, we do see the movement from zone 3 to zone 2. That's relative strength. Take a look at the RSI crossing that 50 line. So on the daily chart, there's the positivity. What we want to do is we want to see if that positivity reflects on the hourly chart. And what we can do is we can monitor the support levels. So the central pivot and the S1 level look quite compelling here, just to see if we get the dip in the uptrend. So some sort of pullback and then the push up. So that's one way that we can look at it. Keep an eye on the indicators. How does this fundamentally flow through? It all flows through from the yields. We've been talking about overbought yields. Those overbought yields, those frothy yields, look to be correcting at the moment. Let's just do two more charts, gold and DAX. Let's just bring up gold. Gold typically moves in an opposite direction to the US dollar. So when we take a look at this on the daily chart, it's popped, hasn't it, from zone 3 into zone 2. So there is relative movement. I'd like to see the RSI move above 50, but if we take a look at it on the hourly chart here, I think this is looking fairly positive. Okay, you've got the cross on the EMAs. Now we just need the angle and separation, and then what we need is for the stochastic to pop as well and move into the upper quintile. Okay, so we're pretty close to that, and that may suggest a swing there. Again, keep an eye on those yields. If those yields pull back, I think that's the tailwind for gold. Okay, very last chart. Okay, RSI is also momentum. Yeah, it's just a different way of measuring momentum. I like looking at the 50 line. Above 50 is positive momentum, below 50 is negative momentum. The difference is the stochastic doesn't give overbought, oversold readings. The RSI does give overbought, oversold. Raj suggesting geopolitics may support gold. Yeah, gold also may be bid because of the Mideast conflict, absolutely, and it does look like there's a risk of expansion there. There's been activity on that northern border with Hezbollah, and there's a risk that they kind of get pulled into the conflict as well. So there may be some attraction towards gold. I tend to think that the preferred safe haven is the dollar. That's my personal feeling. If the dollar gets bid up because of a risk-off move, that may act as a headwind against gold. Although there is an understanding that gold is a safe haven. Myself, Raj, I want to look at the price action just to see which is the preferred safe haven at the time. Let's take a quick look at DAX, and then I'm going to conclude because we've got to go through to the next webinar, which will be our crypto minute. But let's have just a quick look at DAX. Again, I like the fact that DAX is moving from zone 3 to zone 2. I like the fact that it's popped 50, and then just a little bit of red here suggests we can look at the support levels. So we can kind of start looking now at central pivot S1 levels just to see if those act as potential platforms for a higher index. All right, gonna wrap up here because we've just gone a minute past the hour. We're going to go on to the crypto minute. Thank you very much, guys. Please join me for that if you're interested in cryptocurrencies. Thanks very much.